And welcome to BQ Prime. India's stunning GDP growth at 6.1% for the fourth quarter has been making headlines. We at BQ Prime have been bringing you lots of voices, both domestic and global. Today, we bring you a very important voice from Fitch Ratings. We are joined by Robert Sierra, who is joining me from London now. Robert, welcome to BQ Prime. Thanks for joining.
Hello, thank you for having me.
Thank you for taking your time out. My first question is, the GDP data that has come out is something much better than expected for the fourth quarter, which is at 6.1%. And for the overall full financial year, it's 7.2%. How do you read these numbers?
The number obviously was very strong, and it's higher than most people expected. It's a pleasant surprise in terms of the breakdown in sector output. So you had an increase in construction, an increase in manufacturing, which is pleasant because you've had 2 quarters of contraction before we had a pickup in manufacturing output. As I say, construction and also farm output, they are welcome. In terms of expenditure, breakdown of GDP, domestic demand is what's driving the economy. I think we are coming into our forecasting round in the next couple of weeks at Fitch, and it's possible that growth could be upgraded somewhat because of this stronger number that we've just had for the first 3 months of the year. That's the near term. Obviously, the Indian economy is facing some challenges over the next year, as many other economies are.
Right. You said the forecast could be upped somewhat. You seem to be a little cautious.
Yeah. I mean, the growth that we published in March in our global economic outlook was 6% for this fiscal year. I could see there's room there for perhaps a modest improvement in the GDP forecast. But as you say, there are plenty of challenges ahead, not least the global geopolitical environment, the sort of tightening in monetary policy. You have to bear in mind that although in India's case we've had 250 basis points of monetary tightening and similar sort of large increases in large tightening elsewhere, most of that tightening still hasn't fed through the whole economic system, so that the worst is still to come in terms of the impacts of monetary policy on the economy. As I say, the geopolitical problems, the fiscal tightening also, which is taking place, particularly in India, sort of a gradual meeting of the fiscal target, monetary policy, plenty of challenges ahead in a very uncertain environment, which doesn't bode well for things like the investment outlook, for instance.
Right. Okay. So before I come to the details about the investment outlook, the near-term challenge is going to be monetary policy. Fed is going to come out with its next policy announcement next week, and there is some noise, I would say, that Fed could once again use the word pause, and maybe we could see the end of the rate hike cycle, which means that the risks are kind of diminishing. Is my assessment right, or how do you react?
Yes, I think the word that we've been hearing in the market is a skipping or pausing. We still have one more hike in policy rates in the US to 5.5%. I think that the hope is, the sort of the outlook is for the global economy to slow down. You're beginning to see a slowdown in inflation, headline inflation. core inflation is also slowing, but not as quickly as some of the policymakers would expect. So I think for us, I think the bias is either for policy rates to remain on hold once they reach the 5.5 in the US, and to keep them there for the foreseeable future, perhaps until the middle of next year. I think that's what most central banks are signaling at the moment, is a sort of coming close to the end of the tightening cycle, but no rapid decreases in policy rates in the next couple of months or so.
Right. So back home here in India, on the 8th, the RBI will announce its policy. There is this view again that RBI will pause once again and not do anything, leave the rates unchanged. The situation here in terms of inflation and in terms of policy rate outlook is slightly or quite different from the from what we are seeing in the US and the Fed action.
Yeah, I mean the RBI has been on pause, since early this year. I think the RBI is also on a sort of wait and see approach. When they went into the April Monetary Policy Committee, you had inflation which was above the inflation target, the sort of the tolerance band for 4% plus 6%. But as we go into this coming RBI MPC meeting, you have headline inflation which has already dropped to 4.7 in April. The way I see it is, if you look at the recent trend in monthly inflation prints, which have been in the region of about 0.2 to 0.5. Can you still hear me?
Yes, of course I can. Please continue.
Sorry, I thought that the computer had frozen for a moment. As I was saying, the monthly prints in inflation have been coming in at around 0.2 to 0.5. And what you have is very strong base effects from last year's large month-on-month increases in inflation last year, which will drop out of the annual measure of inflation. So it's possible that annual inflation drops from about 4.7 in April, closer to about 4% by October of this year. So you've got an economy that's doing quite well in the first 3 months of the year. We've got these challenges which are emerging and will be emerging as the year goes on. But also at the same time, you have this inflation outlook, which is bringing inflation back towards the RBI's target. So there's a debate at the moment whether the RBI needs to stay on hold, monitor conditions as they are, and eventually at some point turn towards policy rate easing at some point, but not immediately.
Right. The fiscal deficit, the core issue that we are all looking at, it's a very important factor, whether it's for rating or for giving a big push to the economy. The government has been doing heavy lifting. We are looking at a target of 5.9% in the coming financial year. Do you think that the fiscal deficit, any attempt to, of course, we have a glide path for fiscal deficit to come down to 4.5 over the next 3 years, but do you think that any attempt to tighten the fiscal deficit, discipline fiscal deficit, will it affect growth? Because government spending is going to be very critical for the economy.
The government's message inflation, its fiscal target, as you say, 6.4% in the previous fiscal year. The target of 5.9 looks doable. I think that's a given because of the sort of strong growth that we've had. It's a bit of a challenge when you get to the 4.5 target, because it means that you have to, in a way, you have to increase the pace of consolidation in order to get to that 4.5% by fiscal year 26. I think the positive is that while committing to credible fiscal consolidation, the government has led the revival in investment cycle through capital expenditure, recognizing its multiplier effect by crowding in private investment, and therefore lifting the economy's potential growth. So, in effect, what the government is doing by consolidating, by focusing on capital expenditures, lifting the potential growth, but also making inflation, the economy less inflation prone by increasing the potential side of the economy. So
Yeah,
you're consolid.
yeah, continue. Sorry, yeah.
No. That's it. So it's targeted. It's making sure that the fiscal consolidation is done the right way.
Without compromising on growth potential. That's a very
Yeah.
important policy approach. My next question is, the rating outlook, of course, is stable. If I'm not asking you to comment on the rating part itself, my reading is that right now the existing rating, if hypothetically, if it has to be upgraded, if the outlook has to be upgraded, what are the things that India needs to do to qualify for an upgrade?
I'm afraid I'm not qualified to comment on ratings. The way that the economics team is set up in within Fitch is we have a definite clear separation between ratings and economics. But I think the things that we talked about has to be fiscal consolidation, making sure that debt is sustainable, um, increasing the appeal of India to external investors, and those sorts of issues.
Yeah, I understand and appreciate that you won't be able to comment on the rating part. Uh, However, in the eyes of the world, is India a good destination for investment? As far as investment outlook for India is concerned, that's going to be a very important issue, which I'm sure you can comment on.
Yeah, I mean, in India, India is a young population. Yeah, plenty of young people, the right demographics. So there's potential there for India to benefit from a sort of a consumption-led growth in coming years. Um, Obviously, in the near term, we've got the inflation problems and the scarring from the pandemic. But the longer term, these are issues. The sort of the young population and so on, which will be beneficial, which will be seen as positive to international investors. The other problem in the near term, obviously, is the foreign direct investment, which has been rather slow. Um, rather slow, and will need to pick up in time in order for India to develop its to increase its potential growth.
Right. Uh, this talk about shift away from China or reduce the concentration risk as far as China is concerned. That's is this all talk, and do you think that that's going to be real and India could benefit from that?
How do you mean to move away from India and look for different trading partners?
No, what I meant was that in terms of investment in China, as opposed to
Mm.
India, I think there is a general view that people don't want people want to move away from China and look at other emerging markets. How would India benefit from this?
Yeah, that seems to be. I mean, I think the wider question here, obviously, is geopolitics. Aside from any trade issues, well, in a way, both are connected. Um, I think India can benefit, as I say, because of the potential for growth. Even when you have all these challenges, India is still expected to grow at 6%, which is one of the strongest growth rates in not just in emerging markets, but in the wider economies. There are challenges in China which people continue to mention, perhaps the higher labor costs and so on. So some of the focus has been away, in a way, shifting away from China to some of the more newly industrialized countries like Vietnam's and the like.
Right. The next crucial important factor that at least in terms of macroeconomic positives is the external situation for India and the current account deficit. Account deficit has narrowed to about 2.3% of the GDP, and the reserves are roughly about $600 billion. On both counts, India appears to be well positioned. What's your take on these two?
Yeah, I mean, I think this is a question related to the trade sector. So it's the trade account, which is the largest part of the current account. Exports in a way have not been doing very well for India, but then again, exports of goods have not been doing very well for any country in the last few months. And I don't think this will be a picture that improves over coming months, because you have an expected slowdown in many of the larger manufacturing countries, also slowdown in the US, a slowdown in Germany, which are two of India's largest partners. So you have a slowdown in terms of goods exports, but the other side is services exports, which until now have been growing quite decent, but they're also beginning to slow down. I think the manufacturing sector's performance is key here, and in the last fiscal year, not the one that's just finished, but the one before, you had manufacturing output growing at, I think it was something like 11%,
Yes.
which dropped to 1% in the last fiscal year. So it's a noticeable slowdown. So I think the manufacturing sector's performance is it contributes to vital exports and private investment growth, with the latter has almost in a way struggled to pick up. So you need to have a recovery in the manufacturing sector, but this is going to be difficult in the context that we're talking about, this increased global uncertainty with monetary policy tightening, with slowing global trade, and I think this will inevitably lead to a deterioration in export positions.
The next question is about, do you see any structural changes that are happening in India, number one? And will there be some structural changes which can give a big shift to the Indian economy and go for the next leap? Forget the next 1 or 2 or 3 years. Can we see that big shift coming?
I think, yeah, that many of the issues that we were talking about before, the demographics are advantageous. The government's push on infrastructure spending, I think that's been very positive. I think the hope as well is to make sure that the pickup in sort of government capex is spread to the private sector, so that you have all these factors, higher labor participation rates, all of these factors to increase the potential growth of India. So these are structural changes which need to happen, and the government has a role to play in all this, obviously, in terms of making sure that you have the right infrastructure, the levels of education, increase in growth per capita, and many of the other sort of development indicators that they should see, that need to improve over time if India is to make the most of its economy, of its people, of its capacity.
Yes. And one last question, which is very important for most economies, especially for India, because we are among the largest consumers of petroleum. We import a lot of oil and oil related products. Given the current situation, do you think that the crude oil prices could be a risk for India as much as for the rest of the world?
Do you mean in terms of going higher from here?
Yes.
Perhaps. Um, yeah, obviously we had the decision by OPEC over the weekend just gone, which pushed up the price of oil somewhat. Yeah, the price of oil. I think what we see is the price of oil declining somewhat, but not very much. I think it stays 70 around those levels, 70, 60 over the medium term. And that's because, on the one hand, you have this transition away from oil, fossil fuels, as we move towards, for instance, electric vehicles and so on. But at the same time, what we're seeing at Fitch, at least in the economics team, is that you have a significant drop in capital expenditure in the oil sector. And I think this is likely to affect the supply side of oil. So, it's not just the rapid drop in demand as you head into diversification away from fossil fuel, but it's also the impact of capital expenditure on the supply side, which keeps the price of oil bid. So it's not a collapse in the price of oil. That's how we see it.
Right. So to sum up the discussion, two key challenges for India and two key strengths.
I mean, near term, the challenge is inflation. I think you have to bring inflation under control, and that's been key not just for India but for all emerging markets. You want to avoid previous episodes of not getting on top of inflation and letting inflation run away and inflation expectations running ahead. You have to control inflation. Otherwise, it persists and it stays in the system for much longer. And I think the RBI appears to be doing a good job in terms of that. Another I think maybe three challenges. Another one would be navigating the global uncertainty. I think by having the right mixture of monetary and fiscal policy, being aware when to tighten, when to loosen. And I think the sort of the other point that we mentioned before is to bring in the private investment, the private sector investment more on board, hand in hand with the public investment. Challenges. What was the other half of the other questions? So challenges is one of the things. So the positives.
Yeah. What are the strengths, key strengths, which will help us grow? Further, you highlighted the challenges. What are the key strengths which will help us sustain this growth?
The government-led investment. I think that's been quite positive. I think that will, obviously within the bounds of the fiscal, the broader fiscal picture. Yeah. But as we said before, you can consolidate while making sure that the spending is going in the right places. I think making sure that you get the right amount of investment, I think that's will help India's potential growth over the long term. I think that will be a positive.
Right. I think the positives and challenges are more or less evenly balanced, as Robert put it out. Thank you so much for talking to BQ Prime and giving us insights on where exactly the economy stands in spite of all the optimism and the euphoria and the big headlines that we have been seeing in the past 1 week. We have a very clear picture that India's growth is sustainable, but there are challenges, there are opportunities. We are on the right track and we should be able to seize them and grow further. Thanks once again, Robert, for joining us.
Yeah, thank you for having me. Thank you. Bye-bye.